Hi, I'm Dave Purdy, founding partner of Wealth Management Midwest. Welcome to September. Attached to this short video is our September market commentary. Please read and enjoy it. If you have any questions, give me a call. A couple things. Markets have been hitting all-time highs. And isn't that interesting? Because there's been a lot of headwinds. Recently, the unemployment number clicked up a little bit. Things are starting to slow down. And a normal person would think that, gosh, that's bad for the stock market. But what that means is it's really given the Fed the green light to cut interest rates this fall. And some are saying maybe a quarter point the next couple of months. Some are saying maybe a half a point. But when interest rates go down, stock market goes up because of borrowing costs and so forth. So we've got a lot of positives. And I think one thing over my 37 years experience is markets always go higher than you think and lower than you think. And right now, earnings are still strong. Unemployment is still reasonable. Things are slowing down, which is positive because the Fed will cut interest rates, which is good. So I think, the big thing is to stay with your investment objective and keep going. I think that I want to switch gears. Recently, last week, I was actually on a motorcycle trip to Sturgeon Bay, Wisconsin. And it's a special place is in Sturgeon Bay because my grandfather, he died many years ago, used to live there, right on Sturgeon Bay. And so my younger brother Eric and I drove motorcycles there, and we thought, it might be kind of fun to go to Grandpa's old house. And so we walked over to his house. It's right at 15 Utopia Circle, overlooking the bay. It's unbelievable. And the new owner was there. And so we started talking with him, and he said, well, I got to give you a tour of the house. And I started asking him, I said, gosh, it had granite floors, granite countertops. It was all redone. And he said, well, the guy who had it before him left only enough to have it considered a remodel, because otherwise you could never build that close to the water. So the guy rebuilt the whole house, and I got to tell you, it was exquisite. It was unbelievable. So I'm back in the backyard talking to the guy. We're looking at the water, and I said, gosh, but how did you come to get this place? And he said, well, the guy who renovated it, built the whole thing, he had lots of dollars and no sense. And I said, what do you mean he had lots of dollars and no sense? And he goes, well, he inherited a bunch of money, came into a bunch of money, started buying and building things all over the place, and went completely bankrupt. And he said, I got this place for a song. I bought it out of foreclosure. And, you don't even hear about foreclosures, but anyway, he bought it out of foreclosure. And I was walking back with my brother, and I started thinking about this. How many people over my experience here in the office over all these decades, do you either know somebody or a friend of a friend or that has more dollars than cents? And I think for our office, one of the things we do is we're very connected to real estate people, mortgage people, Medicare, Social Security, commercial property, investments. And I think on a market update like this, sure, we're concerned about the inflation report, GDP, tariffs, all that kind of stuff. But I think what it really boils down to is just the art of making a good decision. And so as you read this commentary, if you've got any questions or we can help you in any other ways to make a good decision. So I don't want anybody referring to any of our clients as somebody with a lot of dollars and no sense. Thanks.